Today we have a special guest, Brandon Neely, talking about the book Profit First. Brandon, thank you for coming on and welcome. Maybe if you could just give us a quick intro about your background and why you decided you wanted to read this book and talk about it.
Yeah, I am a big fan of this book, so much so that we became Profit First certified professionals. And a little bit about me, Alex, is I used to run a brick and mortar coffee shop, did everything wrong, last to get paid, last to do everything. And, all these people will come back to you and say, yeah, but you love it. That's why you do this business, not, you know, this is the whole reason that you're in this business. And I had to step back a couple of times and say no, but I still like to eat too. And so through this and doing the infinite banking strategies, I wanted to have more control of my finances. And we moved from the coffee shop to, we now run Wealth Wisdom Financial Partners, and really helping people think about the mindset of money, cash flow management system, um, specifically business owners. And I love the profit first model because it puts that into our regular rhythms to build a business that we love and hopefully loves us back. And now I just do that, talk about cash flow management from banking yourself, infinite banking type strategies, to the profit first system as well.
So, Brandon, if you want to go ahead and just describe what is the Profit First methodology.
Yeah, so I think about it going backwards, and a lot of times when businesses operate, the the way it's usually set up is we get paid last, or profit comes last, right? And then Mike Michalowicz, who wrote the book, he says profit should come first. And then you reverse engineer your business instead of making or putting in the cost of the business, taxes, all that stuff in the front end. We reverse it and put it on the back end, and then build that backwards, right? Does that make sense? Kind of that way.
Absolutely. Well, I was just going to say, can you kind of describe, like, in the book, it sounds like a lot of work on the front end setting up all these accounts. Can you describe the different accounts they kind of recommend in the
Yeah.
methodology, and what's like, why is there an advantage to setting up the different accounts over just separating them like in a spreadsheet?
Yeah. So I've done it in the spreadsheet. I've done it in YNAB, and those kind of things. Not everybody is, actuarial types like you that can maintain the spreadsheet. Some people, they need hard, fast barriers, right? So that way they don't kind of screw up. And so the reason I think that what Mike Michalowicz says in the book is like making smaller plates, right? So on Thanksgiving, right, we have a giant plate of food and we'll just keep eating, right? And that's the way most Americans are. We have this giant plate of food that we over consume, whereas what we need to do is make smaller plates, right? So that way we know, hey, this plate's empty. I don't need to go back, or all those kind of things. And so basically it's just it's the bucket strategy, or putting them into different buckets so we can operate in the right way. So we're not thinking we have all this money, right? And then we realize, oh wait, I just spent this money on inventory, whenever I have a huge tax bill that should have been allocated towards taxes, but we didn't do that.
Setting up all the accounts is just an easy way to, I guess, at a quick glance, understand the health of your business. Is that more or less
Mm-hmm.
correct?
Yeah, understand the health of the business, and also moving those things over into those certain buckets makes it a little more difficult to make sure you're running a healthy business instead of just saying, oh yeah, it's in the Excel sheet. Or most people, when it comes to business ownership, they don't even understand their numbers, right? When it comes to marketing and when it comes to finance, what I tell people is you need to be the CFO of your business before you even hire one. Understand the numbers so you know if you're running a healthy business or you're running a hobby. Because most people are running a hobby and thinking it's going to eventually pay them out in the end. That's what I learned in the having the coffee shop, and why I transitioned was because I'm like, wait a second, this isn't where I want to end up. The numbers told me a story. I needed to listen to the numbers.
So you mind just, I think you mentioned just taxes and profit, but you want to mention what some of the other, I guess, accounts that Mike suggests making and what those are? Maybe.
Yes. First off, you would have, and this is a broad stroke, you would maybe make them different for different businesses. There might be some modifications, if you will. So basically, you have your income account, right? That's the account that all the money's coming in, right? And you might have mats and subs, contractors, those kind of things. That might be what you subtract from the income account first, right? And then divided those accounts up. When you get the income, you want to divide them into basically five accounts. Your profit account, profit first, right? Your owner's pay. You want to make sure that you are, as the owner, getting paid as part of it, right? And not just creating an expensive hobby. Your tax account, you'd be surprised how many business owners forget that taxes are going to come through, or they go through the whole, what do you call it, year thinking they made a whole lot of money, and then that tax comes and they're like, oh wait, I owe $15,000, right? So you want to make sure you're putting that in the right bucket. OpEx, right? Operation expense, and did I say five? That was five, I believe. And OpEx is your operation expenses. So if you've done it in the proper allocations, depending on the size of the business, your business, including staffing and all that, should run lean, right? You should be able to run a business 30% OpEx. That's including rent, those that kind of things. So that way we're not creating what Mike Michalowicz says, a cash eating monster.
Like from a personal finance standpoint, and he actually mentioned Dave Ramsey, I think briefly in the book, and it kind of reminded me of his like envelope. I mean, obviously Dave Ramsey did not invent this method, but he strongly talks about like, putting cash in envelopes. Has the profit first method gone into your personal life too at all?
Oh, absolutely. And I would say the crazy thing with Dave Ramsey is he had a video where he said how horrible profit first was. He also had a video of how horrible infinite banking was. And the thing is, what drives me nuts is I'm like, I do both. Apparently, Dave Ramsey didn't research anything, because profit first clearly says how awesome Dave Ramsey is. Right. And I'm like, this is ridiculous. Like, he doesn't know his audience, because he's basically using that system of making sure you're not going into crazy debt, like Dave Ramsey would say, the envelope system, for a business, right? So I think it's absolutely similar in that regard.
I just watched that video and made a YouTube reaction video off of it. And the thing was, because he was talking about how it's like kind of outrageous to just think you can make separate accounts and you all of a sudden be more profitable. But like a lot of his methods are more on like the emotional side anyway. And it's not really about the math. It's about managing your emotions and that side of it. And I think the profit first is right up that alley on managing just how it's organized.
Yeah, and that's the hard part in profit first, or in business, when people come into business in general, oh my gosh, they all think it's going to be up and to the right. Like there's never going to be any volatility. What having the systems in place, ultimately, like I have a business partner. All I need to do is look at the numbers. We'll look at our spreadsheets. We'll look at our bank accounts and say, okay, what is this telling us? Can we get a raise? Can we not? Well, we stick to the system. The numbers don't lie.
I sort of, back to Jack's point, I sort of thought also a lot of the book talked about, I believe you called it Parkinson's Law, where if you just expand whatever entity you're measuring, you sort of expand into it. And it's kind of like almost operating your business on the least amount of money possible, but you can still do it. And because he goes into talking about cutting out all the sort of superfluous costs. Maybe can you expand on that principle a little bit?
Yeah. So I think about inflation happening right now and the cost of running business or even the cost of running a household, right? So they call it an expense challenge. So a lot of times we as business owners or individuals, we have the shiny object syndrome, right? Where all of a sudden we're like, oh, I want this. I want to get this. And you get it and you realize this didn't really help me that much. And so you want to really go and figure out which things are not helpful, right? That's the expense challenge. Take out the fat and maximize 80-20 on the things that are going to be good, right? So if you're having that conversation with your money, you're going to be able to make better decisions there. And you're attacking it from two sides. Expenses. You can't shrink your way to wealth, right? But it is helpful to make sure you're not spending on stupid stuff, right? And then amplifying what's actually working.
How would you view like a company that's just starting? Maybe someone wants to turn something like a podcast, for example, where you're not really generating a lot of revenue. How could someone in that situation maybe look at profit first?
It's all percentages, right? So $100, right? If it's $100 and you're doing what OpEx is, or not OpEx, but what TAPS is, target allocation percentages, 50%. And you might not start here, but you want to move into it. And it's 50% owners pay, 30% OpEx, 15% taxes, 5% profit, right? You might not start there. It might be 90% OpEx. What you want to be able to do is every quarter adjust those things so that way, Jack and Alex get paid, right? At least something, right? And maybe it's only on that $100, maybe it's only $10 divided by two, $5 each, right? I don't know. But you want to then also amplify and look and say, okay, we need to generate income. How do because it's all percentages, right? So you turn that 100 to 1,000. That's a bit more money, right? But it's all percentage based while making sure that you're not saying, oh, I need to grow this $1,000 and it's all going to, I don't know, podcast fees or something.
How would you recommend using the profit first method for just a normal W-2 worker or just someone that isn't running a business? I think it would still be somewhat applicable, not obviously totally applicable though.
Yeah, I go back to something that profit first is really good for business system. I've been thinking a lot about this, and that's why we created for us, we have a method we call the STILL method. And if you go to stillmethod.com, you could find it. But it's first, you need to set your sights. Okay? You need to know where you want to go. And most people, this is the problem that happens in business. It happens in personal life. Most people haven't even sat with that, right? They don't actually have goals. of what kind of thing they want to accomplish, except to go to Disney World or something. Usually that's the biggest goal everybody has. But anyway, so you want to set your sights, track your in and out. You want to inspect your progress. That's the T and the I. Look for 1% adjustments and live deliberately. Literally, just this morning, we make 1% adjustments personally in our personal budget, and we save a portion. We do the allocations, and we're like, oh, well, now we have this amount of money that we have because we're budgeting. And I know some people hate budgeting, but it's really, I'm giving my money coming in a job, and I want to make sure that I'm positioning it in the right place. So that's why I like budgeting.
So on a personal side, do you have separate accounts? And I guess could you talk about how many accounts you actually have now between your company and personal?
Bank accounts?
Bank accounts, yeah.
Oh, I got all of the profit accounts, and then I have an income account for my let me see, for my regular expenses from the household. But then I'm a infinite banking. So I have bank in yourself policies, and I have 7 bank in yourself type policies as a family. And all of those have different distinctions for them. One is a business policy that's used, 2 are personal, and I use those interchangeably. So literally, I'm thinking like the bank in this case, and I literally used my policies to buy a commercial real estate building. That I've been using these things a lot. So, how many bank accounts? I think I have 7 personal bank accounts, and I have 7 policies as well. I'm pretty sure my wife does all the budgeting, so she knows all the accounts and reconciliation.
For some people that might hear that, how do you avoid getting fees, like maintenance fees from the banks, from having different accounts and the maintaining the minimum requirements and things like that?
Yeah, that's where I've worked with credit unions, really figured out which banks have it. And I've set up auto draft protection on some of them that will protect the other accounts, right? So if something happens, they will kick in to make sure all the other things are okay, right? And I also don't operate on a thin margin. I do have, a couple months, kind of like Dave would say, 3 months of emergency fund, right? I have that in my business too.
We've talked about that quite a few times on this show. Can you maybe go over how, I guess, what your cash flow looks like when you're mingling your banking policies with like your profit first accounts?
Yeah, there's a thin gray line or red line or blue line, whatever line you want to say, between business and personal. And I think of myself as wearing different hats very often. So personally, I own a lot of things, and things go through my hands as a business owner. But then me as a person might loan the business money, right? Like, again, for the purchase of a condo, my personal self gave the business a loan, and then the business is paying me rent. I'm the best renter there is, too. I don't have to worry about any of this stuff because I'm going to take care of the property, because I'm both the owner and the renter. But you want to draw this out. We did this in a video on our YouTube channel where we drew it out to make sure all the different accounts work well with each other. And that's why you want to have regular rhythms with your money, right? Because it didn't just start where we're at. Like, we've been doing this for years, and making tweaks as business has grown, as maybe things have not worked out so well. Just because there's always opportunities, there's also threats that happen that you have to overcome. Like literally I had to use my life insurance policies as a line of credit whenever a flood happened in my business. Literally, the roof was off, and that rain freak storm, and I needed money fast. So I used my line of credit to overcome that obstacle.
Could you talk about maybe some success stories with Profit First that you've had dealing with clients, or just cool stories?
I think there's like so many, again, success stories is seeing where people finally realize, oh, I do have the authority to pay myself. Too many people just keep reinvesting in their business and saying, eventually it'll happen. Eventually I'll do that. And to be able to have the switch of, no, actually you get to pay yourself, right? That's you've actually put that in place, and the profit account. And most of the time we'll put into the stock market, right? At least not right. Maybe not right now, but we'll put in the stock market and say, I'm going to get a return because I'm investing in this business and I should get money back as a profit, right? Well, shouldn't that same thing apply when we have a business that's profitable, right? And so whether it's, them feeling like, hey, I got a profit because I've done good work, and I can go get an ice cream cone, whether it's a small amount of profit, or I can go buy, I don't know, whatever it is, a bigger thing. Those things are really awesome to see, and to be able to help people like engage with their money, and see that they are running a profitable business because of it. And they're able to not just create a business that's servicing JP Morgan, because I don't know if you guys have ever seen this in some of these businesses, JP Morgan or whatever, that most businesses are just paying them a whole lot of money with credit card fees and all of this. So to see people, overcome that obstacle and be able to capture the money that's going through their hands, that's huge.
So there was a section in the book where he talked about if you're in substantial debt, which I'm imagining a lot of people are. You maybe want to go over how he gives some good examples of how to pay down debt. You want to maybe go over some of those methods?
Yeah, some is asking yourself, how did we get there in the first place, right? What were those things? Because you could run a profitable business, and I've seen this happen many times, where we get them out of debt and they do the same habits again, right? I've helped people like overcome certain things, and they never start paying themselves back or treating themselves as humans, right? And so we want to like really get into the how did I get here, and at the same time, looking at all of the debt, what was it? Was it actually worth it? Most of the time when people go into debt, they don't even remember what they bought, right? That's including in the business. But how do you create as you're creating a business, oftentimes as a business owner, I swear to God, this is crazy. You can go to college and get a loan, right? Low interest loan, hundreds of thousands of dollars in debt. Business can't get credit to save their life, right? Because you don't have a history. And so you have high interest credit cards, right? So that's how I started. And so because of the system, like again, I started a brick and mortar coffee shop. That's a lot of money to start a business. People think it's easy and you're going to make a whole lot back, but you start small. It's those 1% adjustments over time that are really powerful. So thinking about the snowball method, right? Or what they call it, the snow avalanche method. That's Dave Ramsey speak, right? I love the snowbank method. This is exactly what I did, is I put it into a life insurance policy, and then I used my line of credit that I was building in the policy to take care of some of that business debt that I had acquired. And then the business paid that back instead of paying JP Morgan. So I've seen it personally in my own experience where I was able to build wealth and take care of that expensive debt on that's coffee shop.
So to clarify, you took the line of credit you got and put it into a whole life insurance policy. Is that correct?
Or basically, I'm creating my own line of credit. I'm saving for the future. And as I put into the policy, my line of credit continues to build, right? Meaning my policy's cash value. So I just kind of think about that as a line of credit. And then I use that as that is going up. My debts are going down because I'm running a fiscally responsible business. I'm not driving up more debt. I want to run a business that is fiscally responsible. That's running on OpEx that's healthy, not running on OpEx that you're like, oh, eventually, and that's where the system really helps us think through strategically. Am I running a healthy business, or is Jeff Bezos making a lot of money off of me?
Speaking of Jeff Bezos, how would the profit first community kind of respond to like a company that just runs negative for year after year, and they're constantly like, just getting more money to come in to build the growth? How do you kind of think about companies like that in the profit first framework?
I think there's a lot of other crazy businesses out there, tech businesses especially, and the system of getting outside funders, right? And personally, I think that is not a healthy way to run, where we're just building businesses like Uber that aren't actually healthy and profitable. And I would say, personally, how's that actually working out for all of us? This whole system in the past 30 years of doing it this way, how's it actually worked out? And do you want to run a sustainable, healthy business, right? And not even beholden to outside investors and things like that. Now, is it too big to fail and all that other stuff? Are they playing shadow games? And I don't know. I would gather there's a lot of other big things happening, and that's where you go into, I'm not going to go political or anything like that, but there's a lot of big business things that we have to really think through.
Could you maybe give an example of, I guess, one business you would say that is healthy, like a larger business maybe that you think is run well?
A larger business that's run well. I mean, I'd have to look at their balance sheets and all of that. And the problem in our media world is we only show what we want to see, I guess, and that's such a hard thing, right? Because even then, thinking about the problem with the big CEOs who are making billions of dollars, and the middle class is making, or little smaller people in the business or company are not making anything, and I think that's not healthy. And personally, I want to run a business that has integrity. Maybe that's a pay cut for me, but I'm okay with that. But I want to build a healthy business and help other people have a healthy business. And it shouldn't be where my staff is making more than me, but I shouldn't also be at a place where I'm making $1 billion and they're making 10, right? I I don't know where that's going to end, but I think our tax codes need to be adjusted for that kind of stuff. But I'm neither a socialist or a Republican either. So
so Brandon, one of the things at the tail end of the book started talking about being efficient first and then growing, and this idea of trying to find things that can like 2x your results with like half the effort. Do you have
yeah,
any? And they give the example, I think it was UPS, where they changed their routes from like they had all the trucks only turn right instead of turning left
yeah.
also. And that saved like, I think it was like $6 million a year or something, some crazy amount. Do you have any stories like where you've thought like, how can I 2x my results by having my effort?
Yeah, I think first that a lot of times people are wanting to 2x their results without building the foundation, right? And that's why a majority of businesses fail, right? Because they haven't built a solid foundation, or they're comparing themselves to Jeff Bezos when they're a baby company, right? And I kind of look at building foundational wealth, building these policies makes it just so much more powerful, right? I'm only in my business only 4 years old, right? So in this current one, so I've been building the systems and the foundations in place that make things more efficient, right? So this is one example that I think is really important for me. Is I hired an assistant that does a lot of the paperwork stuff. I suck at paperwork. um, Having that person in place, does it generate revenue? um Indirectly, yes, because I can actually be on a podcast with you, right? um Instead of dealing with loan forms or things like that. And so thinking and building foundations. Now here's the problem, and why people, and then our Instagram lifestyle, right? We look and say, oh, how did they make a quick fix? How did they do this? How'd that house go up so fast? We don't realize that the foundation work takes some time, right? It takes time to build. But then as you have those big accounts in there, you're able to, and then if you've understood the numbers, amplify what's working and what's not working. So as I've seen this happen with clients, they're able to look at the numbers and be able to say, okay, I'm going to put more into this marketing effort, right? Or here's the thing, sometimes it's not always about money. Hey, wealth is not always about money, in my opinion. Wealth is more than that. So for us, having uh, our assistant in place has brought a wealth of time for us.
Any
That
more
makes sense.
questions, Sal? Yeah, absolutely.
Yeah, yeah. I think I don't know. Would you, Brandon? Is there anything else? Any other dying topic you would like to discuss?
Well, I think the main
I
thing
think
that
I've probably
why I love Profit First and I love Banking Yourself, right? I have this Banking Yourself book, Profit First book. You guys read a lot of books. What would the Rockefellers do? Right. That's another book that I read.
yeah, that was a
The
good
Case
one.
for IBC is realizing as a business owner, we are all in the banking business. And as an individual, you're in the banking business. Um, Money just flows through us. Even on the a dollar bill, it's a note, which is a debt, right? And so understanding how that system works, at least to benefit you, um, and realizing that there's two people that I felt like I was paying who didn't show up to work ever whenever I had the business, the coffee shop business. Um, the credit card companies, all the fees that were going through as we were swiping. And then Uncle Sam, I swear to God, this guy never showed up to work. And I'm always giving him a check. And I was like, what the heck? How do I capture some of that money? And so what I really want people to realize is understand you're not just in the business of selling your thing, which you should be. You should be the best advocate of selling whatever your thing is, but you're also the CFO, right, of that. And don't just delegate that role and say, oh, someone else will do that for me. No, you as the business owner, as an entrepreneur, need to wrestle with those. And if you're just putting your head in the sand, that's not going to serve you in the long run. We've seen how that's working right now. Don't put your head in the sand when it comes to this stuff. And the people that know that those numbers, right, when things hit the fan and they have access to capital, they're going to make some good money, right? But you need to know your numbers.
Awesome. So, Brandon, thanks so much for coming on. Where can people go to find more about you, or if they wanted to work with you, where would they go?
Yeah, go to Wealth Wisdom FP. That's financial partners, wealthwisdomfp.com. We put out videos regularly. We have a podcast, Wealth Wisdom Financial Podcast, and a YouTube channel. So if you go to Wealth Wisdom FP, totally subscribe there. There is a special report. So if you go to wealthwisdomfp.com/report, you want to put the www in the front. There is a report that I strongly recommend everybody download, which is really our understanding of how the money system works. And it's how to generate wealth when you're a W-2 type person, or not a W-2, outside of a W-2, how to generate wealth outside of a W-2. So go wealthwisdom.com/report and download that.
Awesome.
Yeah, I'll give that a read. Sounds pretty good. Please reach out to us at brothersonbooks@gmail.com for any book recommendations, or if you would like to be a guest host for a particular book you have in mind. Yes, Profits First. It was very good. A great review or rating on whichever platform you're listening to would be greatly appreciated. And lastly, if you can think of any friend, family member, or coworker that might like this episode, please pass it along. Brandon, thanks again for coming on. I think it's been a good talk. So let's
do the Creature of Jekyll Island. The Creature of Jekyll Island.
That book's a little too long for a 2-week turnaround. I looked into that a long time ago. I got the axe.
Okay, well, take care. Thanks so much, Brandon.